Gamuda Berhad is an engineering, real estate and infrastructure corporation. It is one of the biggest infrastructure firms in Malaysia and has a track record of providing groundbreaking, creative solutions to clients all over the world. Since its founding in 1976, Gamuda has been instrumental in reshaping the infrastructure of the country, emphasizing sustainable development and state-of-the-art technologies. The business is well known for its proficiency in engineering and construction, especially in the areas of water treatment, property development, railroads, and highways. The vision of Gamuda Berhad is to lead the region in innovative breakthrough solutions for large-scale public infrastructure and property developments. For the mission, it is to reliably deliver innovative infrastructure solutions and premier township for our stakeholders through core business in engineering and construction, property developments and infrastructure concessions. In year 2022, Gamuda Berhad had 36% group earnings, which it is a strategic move to expand their overseas. Besides that, their order book had expanded to 15 billion ringgit and they had recorded a high sale, which is RM4 billion and unbilled sale of 6.2 billion ringgit. For their property land bank, they had their place in Malaysia, Australia, United Kingdom and Singapore. For their financial highlight, Gamuda Berhad had their post-tax earnings of 806 million ringgit. As we can see, their profit before tax is identified as 1 billion ringgit and return on equity is 8%. In addition, their total assets are 20 billion ringgit and owner's equity is 10 billion ringgit. Next, for the sustainability highlights, they had invested 10 billion ringgit for Gamuda Scholarship as commitment to social work. The group also had increased the minimum wage from 1,200 to 1,600 for foreign workers and 1,200 to 1,800 for local workers.
I will explain the first ratio, which is the liquidity ratio. This ratio serves as a financial metric designed to evaluate company capacity to fulfill its immediate financial obligation by leveraging its liquid asset. There are three ratios of liquidity ratio, which are current, quick and cash ratio. The first is current ratio, which is the current asset divided by current liabilities. As you can see, based on our investigation, the current ratio has decreased as much as 0.29. Moving on to the next ratio, which is the quick ratio, whereby current asset minus inventory minus prepayment and divided by current liabilities. As a result, we can see that this ratio also decreased in the year 2021 to 2022, whereby the decrease is as much as 0.22. Lastly is the cash ratio, which is cash divided by current liabilities. As a result of the cash ratio, there is an increase from 2021 to 2022 as much as 0.03. We can conclude that based on the current ratio and quick ratio, it shows that the company has a higher ability to serve its current obligation during the year 2021 compared to 2022. The liquidity position of 2021 is better than in the year 2022. However, based on the cash ratio, the company has a higher ability to serve its current obligation during the year 2022 compared to 2021, and the liquidity position of 2022 is better than in the year 2021.
Hi, Assalamualaikum. I'm Nur Amni. So I'll continue with efficiency ratios. So in corporate finance, efficiency ratios or activity ratios highlights how well a business uses its resources to produce income and run its business. So these ratios shed light on companies' operational efficiency and efficacy. So efficiency ratios are useful tools for the investors, the analysts, management, and the management to evaluate a company's resources and operational management. So it is sometimes referred to as a utilizations ratio or activity ratios. So in the key elements of efficiency ratios are inventory turnovers, average collection period, total assets turnover, receivable asset turnover, and also fixed asset turnover is the components of the efficiency ratios. So as a result, the efficiency ratios for Gamuda Berhad will be. So the first element is inventory turnover. So inventory turnover is used to measure how effective the firm is using its inventory. So the calculations of this inventory turnover is by cost of goods sold divided by inventory. So based on Gamuda Berhad, as you can see, inventory turnover ratio shows that Gamuda Berhad restocks its inventory 2.71 times in 2021, which is lower compared to 6.39 times in 2022. So this high inventory turnover in 2022 indicates that the company is stable and efficient in replacing the inventory in a time-limit manner. So for the second element is average collection period, ACP. So this element measures the average length of time that the firm must wait after making credit sales before receiving the cash, usually from their creditors. So the calculation of these elements is by dividing account receivable and sales and multiply it by 365 to get the average length of time in days that the company received cash. So the average collection period, ACP, shows that Gamuda only takes 181 days in 2022 to collect its debt compared to 195 days in 2021. So this shows that the company has become more efficient in setting its payment to creditors. So for the third element of efficiency ratios is the asset turnover that we call it TATO. So it measures the firm effectiveness in using all of its assets. So this element can be calculated by dividing the amount of sales and also the total of assets of the company. So for Gamuda Berhad, the total of asset turnover is about 0.17 times in 2021 and 0.242 times in 2022. This indicates excellent management as its assets. The company needs to keep this efficiency to improve its effectiveness in using assets to generate more sales. So let's move on to the last but not least elements, which is the receivable turnover. So the receivable turnover measures how efficient the company to collect its receivables. So the calculation of this RT is the total sales need to be subtracted by the cash and bank balance before it was divided by account receivables. So Gamuda collects its account receivables turnover a little bit lower in 2022 compared to 2021, which is 1.71 times in 2022 compared to 1.79 times in 2021. It is slightly lower. This implies that the company has a low proportions of customers that can settle off their debts quickly. So moving on to the last elements of this ratio, which is efficiency ratios. This element is called as fixed asset turnover. This element is a little bit different from the total asset turnover as it needs to be calculated using the fixed asset only, other than the total assets. So the calculation of FATO, FATO is by dividing sales with total of fixed assets. So for Gamuda Berhad, their total of FATO gained higher turnover in 2022 compared to 2021, which is 0.71 times as compared to 0.38 times. This shows that the company had been more efficient in utilizing its fixed assets than to generate sales.
Now I will be presenting on a leverage ratio. A leverage ratio is any kind of financial ratio that indicates the level of debt incurred by a business entity against several other accounts in its balance sheet, income statement or cash flow statement. There are three elements in leverage ratio, which is debt ratio, debt to equity ratio and time interest earn ratio. First and foremost is debt ratio. It is calculated by dividing the total debt with total asset. As a result, in 2021, approximately 48.35% of Gamuda Berhad's total asset were financed by debt, while in 2022, the debt ratio increased to around 49.39%, indicating a slightly higher reliance on debt compared to the previous year. Moving to the next ratio, which is debt to equity ratio, the formula is total liabilities will be divided with the total equity. For debt equity ratio of Gamuda Berhad, it shows that in 2021, the debt to equity ratio was approximately 93.61%, while in 2022, the debt to equity ratio increased to around 97.60%, indicating a higher level of debt in comparison to equity. Last but not least is time interest earn ratio. This ratio is calculated where earning before interest and tax is divided with interest expense. The result shows that the time interest earn ratio of Gamuda Berhad in 2021 was approximately 1.32 times, whereas for the result in 2022, the TIE ratio increased to around 2.53 times, signaling an improvement in the company's ability to cover its interest expense. In conclusions, from this result, we can prove that while Gamuda Berhad experienced a slight increase in its debt ratio and a notable rise in the debt to equity ratio, the improved time interest earn ratio in 2022 suggests that enhanced ability to meet interest obligations.
Thank you for the previous presenter. As we delve into this fascinating realm of financial statement analysis as a crucial tool in understanding the health and performance of a company, I want to specifically shine a spotlight on one aspect of this intricate landscape, which is profitability ratios. Basically, profitability ratios in particular are the pulse of financial health. They tell us how efficiently a company is turning its revenue into the profits, and that is an essential metric in corporate financial world. So considering the company in concern, which is the Gamuda Berhad, the 5 key elements within profitability ratios is taken into account, whereby it consisted of gross profit margin, operating profit margin, net profit margin, return on asset, and return on equity. For gross profit margin, this ratio encapsulates the efficiency of a company's core operation. To calculate it, we can simply divide the gross profit stipulated from the financial statement with the sale and times it with 100%. In essence, it tells us what percentage of revenue remains after covering the direct cost of producing goods as well as services. Based on the calculation, Gamuda Berhad experienced a decline in its gross profit margin from 17.65% in 2021 and 14.61% in 2022. This reduction signifies a decrease in percentage of revenue retained after deducting the cost of goods sold. From this 2 years comparison, it shows that Gamuda Berhad managed to control their costs better and more efficiently in 2021 than 2022. This is because the higher percentage indicates the greater profit of the company and the effectiveness of its cost handling on its core business process. I will continue by explaining the second element of profitability ratios, which is the operating profit margin. The formula of this element is simply yet profound, whereby operating profit margin equals to the operating profit divided by sales and times 100 to express it as a percentage. This metric provides a holistic view, factoring in both the direct cost of production and the broader operating expenses incurred in the running of each business. In this context, Gamuda Berhad demonstrated a higher efficiency in 2021 with an operating profit of 14.8% compared to 12.95% in 2022. Overviewing this, the decline in the operating profit margin in 2022 suggests a relative decrease in the Gamuda's efficiency in managing the operational costs or generating profit from its core business activities. Thus, a higher profit margin for Gamuda in 2021 is more favorable and indicate that 2022 needs some more improvement to retain and exceed the margin value. Moving to the next element, calculating the net profit margin involves a straightforward formula that provides insight into the company's profitability after all expenses including the taxes and interest were incurred. To break it down further, the calculation involves division of net profit
which is calculated as the total revenue minus all expenses, taxes, and interest by the total revenue, and then multiply the result by 100%. The net profit margin reveals the proportion of revenue retained as a profit after all costs were deducted. For Gamuda's net profit margin, the amount for 2021 is 13.92%, and for 2022 is 14.81%. A higher net profit margin is generally considered as more efficient, as it reflects the percentage of revenue a company retains as a net profit after all expenses. In this context, Gamuda Berhad demonstrated increased efficiency in 2022, which shows that the net profit margin for Gamuda company have been improved and they are become more effective in managing their costs, the non-operating and operating expenses. To be more precise, the improvement suggests a better Gamuda's ability to manage the costs, the taxes, and other factors impacting overall profitability. Without wasting any time, I'll continue to interpret the Gamuda Berhad return on asset calculation as well as the findings. To count ROA, net income have to be divided with total asset and times 100%. This ratio will provide insight into how effectively Gamuda Berhad is generating the earnings from its asset base, which making it valuable tools for assessing operational efficiency and the financial performance. So for this calculation, Gamuda's Berhad return on asset or ROA increased from 2.5% in 2021 to 3.6% in 2022, indicating enhancement in the company's ability to generate profit relative to its total asset. The higher ROA in 2022 suggests improvement to asset utilization and increased profitability, which included appear to be a better performing year for Gamuda Berhad. In the context where Gamuda Berhad is concerned, a healthy ROA in the construction sector might range from 5% to 10%. Even though Gamuda Berhad ROA will increase from 2021 to 2022, these figures still suggest a relatively low efficiency in converting its asset into its profit, since it's still below 5%. So, in the construction sector, where capital-intensive projects and the asset utilization were significant, a higher ROA is typically preferred to indicate the effective resources management and better profitability. The fact that Gamuda Berhad ROA remains on the lower side may be considered as a risky effort, suggesting that the company may not be efficiently leveraging its asset to generate sufficient earning. Thus, it can be interpreted that Gamuda Berhad need to consider some effort to improve this finding. Lastly, for return on equity of Gamuda, the calculation required the net income to be divided with shareholders' equity. For Gamuda Berhad, it shows that the percentage for the year 2022 is higher than percentage from 2021, whereby the amount for year 2022 is 7.33% and 4.97% for 2021. This comparison shows that Gamuda companies are more efficient in the year 2022, which indicates that the company can effectively manage their shareholders' capital. Thus, for the year 2022, Gamuda company can be concluded as more efficient in the use of equity capital.
Now, I will explain ways that Gamuda can improve its financial performance based on the ratios under the liquidity ratio. First, for the current ratio, considering the declining current ratio from 2.21 in 2021 to 1.92 in 2022, Gamuda must undertake proactive measures with a specific focus on optimizing inventory management. The optimization of inventory involves implementing a set of well-defined practices to enhance the efficient utilization of capital while maintaining a marketable inventory. Next is a quick ratio that is indicated by a decrease in the quick ratio of 2021 2.03 to 2022, which is 1.81. Gamuda can strategically address this issue by implementing measures to increase cash revenue. This entails a focused effort to bolster the company's cash on hand through enhanced cash management practices. Lastly, considering the increasement of cash ratio from 2021 0.92 to 2022 0.32, which signifies the company's ability to meet short-term liabilities with highly liquidity asset, including cash and cash equivalent, Gamuda can strategically improve this metric by considering the option of investing in marketable securities.
So the suggestions that can be done to improve the efficiency ratios is by enhancing operational performance and resources utilizations in corporate finance. It will improve the efficiency ratios. So Gamuda Berhad can maintain an ideal balance between liquidity and profitability by managing the current assets and liabilities efficiently. So, simplifying by that, the accounts payable and receivables produced is actually crucial. Is a crucial components of on working in capital management, which in my opinion enhance the efficiency ratios by delaying cash outflows and accelerating inflows by lowering its days sales outstanding DSO and also day payable outstanding DPO.
Moving on to the leverage ratio, I will explain on how Gamuda Berhad can improve the performance of each leverage ratio. First and foremost, for the debt ratio, the result shows that an increase in Gamuda Berhad's debt ratio from 48.35% in 2021 to 49.39% on 2022. Gamuda Berhad might use debt restructuring as a strategy to increase performance, providing a different way to reduce the debt to capital ratio. In order to make its current debt more manageable, the company may consider restructuring it. In addition, as for the debt to equity ratio, the results show that it has increased from 93.61% in 2021 to 97.60% in 2022, which indicates a higher level of financial leverage and may suggest an increased financial risk. Gamuda Berhad may employ the approach of equity infusion to boost performance and lower the debt to equity ratio. Gamuda Berhad can raise more equity and lower the ratio by raising it in a number of ways, such as by issuing new shares or looking for venture capital investment. Last but not least is for the times interest earn ratio. Gamuda Berhad has effectively increased its TIE ratio from 1.32 times in 2021 to 2.53 times in 2022. Gamuda Berhad might choose to consider about increasing its operational income in order to further improve this ratio. The corporation can easily pay interest charges and potentially obtain lower cost borrowing by boosting operational profits. Increasing operating income through strategies including cost cutting, revenue development and operational efficiency might become Gamuda Berhad top priority. In conclusion, Gamuda Berhad has the opportunity to strategically address its leverage ratio by applying this kind of strategy. This measure could contribute to a more balanced and sustainable financial structure, reducing risk and enhancing the company's overall financial performance.
Going on to the second area of concern raised by this financial statement analysis, the overall analysis of Gamuda Berhad's ability to make and hold onto profit may also take into consideration the recommendation for improvement. In order to improve Gamuda Berhad profitability ratios for the next fiscal year, the company have to take a comprehensive approach to address different facets of its core operation as well as business. Fundamentally, Gamuda Berhad needs to perform a comprehensive cost analysis to pinpoint areas that can be optimized for saving and improve its operational effectiveness. This entails closely examining the direct and indirect expenses related to the projects and day-to-day activities of their business. As a critical step to produce more profit with less expenses, the corporation or Gamuda Berhad can find places within this process where costs can be simplified, negotiating favorable contracts with the suppliers, and using technology for cost effectiveness solution. By exploring its cost structure in detail, Gamuda Berhad can also make well-information decision to cut unnecessary spending, increase overall cost effectiveness, and eventually improve its financial performance. Next, by delving into the project management, the company also can work to implement the efficient projects. In the construction business, preserving the competitiveness and guaranteeing long-term sustainability need a systematic focus on cost optimization. Overviewing a more strategic approach to improve the Gamuda Berhad profitability ratio, strategic pricing strategies aligned with the market trends and the consumer's demand could positively impact the gross profit margin. To maximize the gross profit margin, Gamuda should focus on reducing the cost of goods sold while also increasing the revenue. This can be achieved by negotiating a better deals with the suppliers, improving the efficiency of the production process, and increasing the sales volume. So illustrating this statement further, it may include penetration, the competitive and cost-based strategies, which also can help in balancing the sales, market share growth, and profit margin. So the split from the idea, net profit margin can also be improved by identifying and eliminating low value expenses and implementing effective tax planning strategies. It is also important to consider the industry-specific baseline and broader business strategies when evaluating the net profit margin. So overall, having an efficient financial management that's staying attuned with the industry trend and maintaining agility in response to market dynamic will be instrumental in fostering a more robust and sustainable financial performance for Gamuda Berhad in the upcoming financial year.
For the conclusion, it will divide into 4 ratios. Firstly is liquidity ratio. Liquidity ratio is number 1 is current and quick ratios. It is performed better in 2021 than it did in 2022. In liquidity ratio, it also has cash ratio. So for in 2021, it is smaller than 2022. Next, we move to the efficiency ratio. Efficiency ratio consists of inventory turnover ratio. It replenished its stock 2.71 times in 2021, a decrease from 6.39 times in 2022. Second, average collection period. The average collection period need 181 days in 2022 as opposed in 195 days in 2021. Next, for total asset turnover, it is a greater ratio than 2021, which is 0.242 times versus 0.177 times. Number 4 is receivable turnover. It is less in 2022 than 2021. For number 5 is fixed asset turnover. It is increased by 0.71 times in 2022 compared to 0.38 times in 2021. Next, we move to leverage ratio. Leverage ratio consists of debt ratio. Debt ratio increased to around 49.39% in year 2022 than 2021, which is 48.35%. Number 2 is debt to equity ratio. Debt to equity ratio in year 2022 had increased to around 97.60%, meanwhile in 2021, 93.61%. Next is time interest earned ratio. In 2022, it increased to around 2.53, then 2021, 1.32. Next, we move to profitability ratio. Profitability ratio consists of gross profit margin. It is from 17.65% in 2021 to 14.61% in 2022. Second is operating profit margin. It is 14.8% in 2021 compared to 12.95% in 2022. Next is net profit margin. In 2021, it is 13.92% and 2022 is 14.81%. Number 4 is return on assets. It increased from 2.5 in 2021 to 3.6 in 2022. Lastly is return on equity. It is 4.97% for 2021 and 7.33% for 2022.